10/5/2013 government shutdown is in play. It is the first weekend of the government shutdown, and the markets have been able to shrug it off. As of course, we shouldn't have to have a government shutdown to have a market correction or a market pullback from absurd overbought levels. This is a daily chart of the S&P 500. Once again, it's come down. It's tested 50-day moving average. It undercut, hits that 1670. What we are looking for during the shutdown period is that on a weekly level, we can see that we undercut the 10-week moving average in the bull run, which is at 1678, and it managed Friday to come up above that. The underliner, once again, remains at 1660. We have a major earnings cycle that will take place Monday. It'll be a light week, but corporate profits are going to contract. Not every publicly traded company is going to miss the earnings. What we are saying, though, is that there's going to be a soft period and that the multiple expansion has played a course since 2009. So, one of the things that we do know is that institutional people will be lightening up on some positions. There will be a continuation of this pullback on the monthly level of the S&P 500. We can see where that last monthly high, 1730, we can see that the October period is underway. We also know that the 10-month moving average on a monthly level remains at 1610.73. Not only do we know that, we do know that it would be healthy for the S&P to come down to that 1600 level before a Christmas rally could happen, because Christmas and Thanksgiving is coming upon us. Not only that, do they get the debt ceiling cleared up? We believe that they do. And that negotiations and the standoff and what the Republican Democrats have done have proven not to be good for the markets in our view, meaning that the bull is extremely complacent. They're expecting, like always, that in the 11th hour of the 12th inning, that there is going to be a resolution. Both parties are stuck in their ways. Once again, the S&P 500 to come down to 1610, that brings us right about here below the markets. Exactly where the pointer is, where we started that last bull rally when we broke through this major resistance level, which was at 1610, to that high with that reversal. Then what we are telling people is that there's a 1670 is what we forecasted in the short term. However, the volatility during the earnings cycle, people are on the sideline. They do want to put money to work. But once again, in order to get another rally up toward the high to break that 1730, we need a meaningful correction where that money on the sideline would want to be put to work. What we will be doing here is that as we end the processes with the government, corporate earnings will be the backbone of the market once this clears out. We are not 100% overbought as we were over here when we called the top reversal. Other periods and other times, as we've called every correction in calendar 2013 for a meaningful pullback, because the complacency, the exuberant, the overbought levels need to be corrected. That's the way that markets work. So one of the things that we can clearly see is that S&P here on the daily, from its highs down to the lows here, 1670 from 1730 to 1670, was a meaningful pullback. It's not a washout. There is not a lot of fear in the marketplace. It was not a capitulation. However, that 100-day simple moving average and the volatility that is upon us forward looking is that individual stocks that are leadership in the S&P 500 that report their corporate profits starting Monday through the calendar month of October and rolling into part of November will be the tell where the buying opportunities will come into the marketplace. So the ones that have been overbought in this calendar year that do get on sale and that are buyable, that we always tell people, you don't buy at the highs. you buy at the lows and you buy good quality stocks. So we're going to pick them up one at a time as they come our way. We're going to play out the government shutdown. It's about $300 million per day, and it's the first calendar weekend of the government shutdown. S&P 500, once again, is not. We have that dead cat bounce on Friday because the shorts were going to get nervous going into the weekend. So Friday was about the shorts covering, and then Monday we'll see a continuation of the selling.